All right. I found my board. Cucumber mint. Loving that. Okay, we said we'd talk about WeWork and the bankruptcy. About 2 months ago in August, I was talking about what was going on with WeWork as they were getting ready to file bankruptcy. They were in the middle of a restructuring. And so now it's happened. They filed bankruptcy and there's big headlines that are out there. BK, bankruptcy. So now we take a quick history back here, history lesson. I gave you a history last time, and now we're going to take a look at this in terms of the stock price and the valuation and go really quick on a graphic from our good friends over at Reuters. So you start out at $527 a share, October 22nd, 2021. Wait a minute. That's 2 years and 2 weeks ago. Are you kidding me? And you look at this. This is like a slide down Mount Everest. We get down. They announced closure of locations in October of 22. A year after this, they're all the way down here at a value of 100 a share, but they're still driving. Then they cut jobs in January of this year. Then last time I talked about it, they talked about, hey man, we need to do a stock split because we have to avoid being delisted. In other words, as they were heading toward $1, the New York Stock Exchange was saying, we may delist you, take you off the stock exchange as a non-investable ticker. And here we are now, bankruptcy protection, 84 cents. So I wanted to quick history and take a look at this to see how bad the situation is. What a slide here. From multi-billion-dollar unicorn to 84 cents a share. Okay, so let's go back to our last episode. Last episode, we talked about headwinds. Headwinds, COVID and work from home, and right? People went home, commercial real estate, a lot of people didn't pay their leases, a lot of businesses didn't pay their leases, and commercial real estate was suddenly available everywhere. So why do I need WeWork? Why do I need to rent commercial real estate if it's available everywhere? Then we had the new CEO saying significant doubts about the company's viability. Now he was saying that because they were getting ready to declare bankruptcy, and you're going to see why he said it in a minute. Then they had mountain of debt, billions of dollars of debt, billions. We'll talk about what that means. And then competition from their own landlords. So check this out. Landlords were typically doing long leases. That's the game a commercial owner and a commercial landlord plays. However, they started doing short leases, meaning flex leases. They're like, wait a minute. If WeWork is doing it and I've got space available, why don't I do short and flex leases? Now, they maybe didn't make a big business and made all the features and accoutrements that WeWork had at its locations, but they started competing with WeWork. So their own landlords competed with them. Well, why would you rent it from WeWork? We'll give you a short-term lease. You need a 3-month lease? We'll do it. So, or flex leases. So landlords started responding to the same business model that WeWork had because of all the economic headwinds that were going. So we talked about that last time. All of this was in the face of WeWork driving that stock price down. Then we talked about the stock split and restructuring being part of that. You know, BK auction was coming up and they've got actions they want to take. And so they did a 40-to-1 stock split. So let's go talk about it. What is a stock split? Well, if you don't maintain a certain price on the stock market, they will delist the company. That's bad. Second, their decision when they were trading at 14 cents was do a 40-to-1 reverse split, which is 560. In other words, they took 40 shares off the market at 14 cents, put 1 share back on the market, or basically run the split to artificially move that 14 cents to 560 to keep from being delisted. It's artificial. It didn't change what was going on. It didn't change all those headwinds. It just kept them from being delisted. It did not also give them any cash. You know, when they do that, there's no new issuance of stock. They're just trying to keep it on there so that there's an equity that can trade in the future as a unit of value because they need that. They don't want it to go off the stock market. So now let's go take a look. You know, I showed you this on the first chart where you can see how it went all the way down here to 14 cents in August. Now let's look at a stock chart that shows you from August what it looks like. Bingo, 560. The same August 18th, this gets pulled up to 560 because there's fewer shares out there, 40-to-1. And then they come all the way down here to 84 cents. There was an announcement that was made that, hey, they're going to be filing for bankruptcy. And on November 6th, the NYSE halted trading of WeWork. You cannot trade. There's too much uncertainty. You're all the way down to 84 cents again. We warned you back this summer. Now you're down to 84 cents again. You artificially brought it up here and you've even lost that value. Get it? So the stock was just part of the story. Now we go, whoop, and the stock market was not buying the story. Not at all. Okay, so why are they bankrupt? Let's talk about it. Well, I hear they're making millions of dollars a month. Yeah, well, it's not just that. Here's all their liabilities, and here's all their assets. Assets are good things, things you can sell for money, things that represent money. Liabilities is dollars you own to the bank, and you can see the net income down here was paltry. So now I've got these side by side, again, thanks to our good friends at Reuters, and let's take a look at this. There's the asset to right here. This gap was almost $5 billion between their assets here, and their liability there. You see that? And let's look down here. And they're losing money all the time, so there is no way to pay it. So I thought this chart would be a really good lesson to look at. They owe this much in liabilities, they have this much in assets, leaving a gap here, and they're not making hardly any profits. So how are they going to pay that off long term? The answer is they're not, so they enter into bankruptcy. Now let's talk about bankruptcy. There's a difference between personal and business bankruptcy. Any individual that files, and I just talked about this, but if you're only watching the case study, I'll cover this again. Chapter 7 bankruptcy for a person is called no hope. There is no hope you have of ever paying anything off. Or Chapter 13 means there could be a payment plan. But both of those are bad because what happens is your credit gets crushed. Chapter 7, 10 years. Chapter 13, 7 years. Forget about getting a decent loan on a car. Forget about getting a credit card with a balance so you can travel easily. You are going to be severely constrained because it's like you have two strikes against you because, who's going to give you credit if you have this reputation thing on your credit report and you're going to be paying the highest interest of anything? You go to Best Buy and buy a refrigerator and finance it through them, they're still going to see that and they're going to give you a higher interest rate and a worse price. It is a horrible experience. And there's a bunch of things you can't take off, such as student loans. Now, businesses, they file for Chapter 11, it's a restructuring. So when you hear a person is filed for bankruptcy, it's usually bad on a semi-permanent level because it's going to be in their background for so long. Businesses, it's really, when you hear Chapter 11 bankruptcy, means restructuring. They're going to go see a judge and see if the judge is going to wipe out loans or mark them down. And a lot of times there's nothing the lenders can do because of the bankruptcy laws that are in there. And businesses don't have to have a means test. A court is going to see if you try to file Chapter 7 bankruptcy in the United States of America and that judge doesn't think it, they'll say you don't pass the means test. You can pay off some of this. You may have a lot of debt, but you can pay off some, and guess what? You don't get to just wipe it out. So that's called the means test. Businesses don't need a means test. Assets, liabilities go out of whack. They can go to a judge and start restructuring debt. And then they can emerge or exit bankruptcy almost good as new, where it's 7 to 10 years for the consumer. So this is a very different deal. Now let's look at the bigger picture. This is U.S. corporate bankruptcies. This is not small business. This is big corporate bankruptcies. And if you think that everything is rosy in the economy right now, it's not. Look at this. The blue is January through August of each year. The light blue is the rest of the year, and here's the total. Now, I have stats through August. Look at that 459. You see there? Look at that. 466 in 2020. That was the middle of COVID. But look here. You go all the way back here. You have to go back to 2010. Whoa, wait a minute. That was 2 years after the crash of 2008, where companies were suddenly reconciling the impact of 2008 and filing for bankruptcy protection. This is the highest number of corporate bankruptcies going in for restructuring that we've had since 2010, except for COVID, and it was almost the same number. You see what we're looking at here? This is going to be a very rough year. Now, why is that an issue? That means banks are going to be writing down balances. That means people are probably going to be subject to layoff, because sometimes in bankruptcy, they lay off a few people. They cancel product lines. They do everything they can to come out of it. But the point is, everybody's talking about how good the economy's be and everything, but the backdrop here is there's things below the surface that are going on, and corporate bankruptcies is significant. Now let's look at it by month. That was by year. Look at it by month. Look at 2023. Look at this. And look at prior. You have to go back to March of 21. Hey, that was a year after COVID hit. COVID originally hit in February of 2020 when the NBA and the NHL and all those cancellations in sports. And look what happened that summer. We shut down the economy and corporations ran to the court saying, I got to get a loan restructured. If you're shutting me down here and I own 200 restaurants, I'm in trouble. So there's where it got restructured. There's where they went. But now look at where they are. We haven't seen a 70 since this time. All of a sudden back here, we have a 70, a 64, and a bunch of 50s. Look at this. There's 150 there, a couple 50s there, 74. It's coming, folks. There's a lot going on. So back to WeWork. So in other words, a lot of bankruptcies are happening in general, even though WeWork is a bright, shining star of personal cataclysmic decisions. So they have a restructuring plan. What's the restructuring plan? Well, they said they went to 92% of their lenders agreed to convert $3 billion of debt to equity. Equity means stock. That's why they needed the stock to stay on the stock exchange. That's why they're hoping that it's going to start trading again with the restructuring plan, because these people had a $3 billion loan. They've turned it into stock where now they'll sit there and wait and watch to see if the company goes up $3 billion or more in valuation so they could sell that stock and get their money. You see what just happened? Now they're not making payments. So $3 billion of debt converts to equity. Why would someone do that? They have a gun to their head. I'm going to go into a judge. I'm going to ask him to wipe out your loan. No. Maybe I'll agree to convert it to equity. There you go. Step one. Then they renegotiated 600 leases, creating $12.7 billion in future savings. Remember the liabilities I talked about? They're trying to lower it. Then this little footnote was in there. They are stating that they intend to break 69 leases by getting a judge to sign off on the order. 41 of those will be in New York. So if New York has a lot of excess inventory now, they're about to have 41 leases for God knows how much square footage in New York is about to be broken by WeWork. The name will come off the door, the space will be available, and the commercial real estate issue will be even bigger. Also, they have 400 other landlords. They got these 600 done. There's 400 others that apparently they're still trying to push. They're going to have the court do it. Then, and Your Honor, 2,700 hardworking people need to keep their jobs, and we need to keep paying for security, alarm, cleaning, and things to keep our other locations open. Get it? Get it? So the judge goes, yeah, it will be good for you to stay in business, so let's wipe a bunch of this stuff off. It's a restructuring plan. This corporate bankruptcy, this is similar, but on a big, hairy level to what consumers do when you get credit counseling or a debt counselor at the order of the court for a Chapter 13 bankruptcy on a personal level. Then they said they're trying to find the optimal business model, but they are now competing with landlords that are offering cheap space. Go to any building and ask them for a WeWork deal. They'll probably give it to you in certain states where they've got, certain cities, where there's inventory. Why wouldn't they? So now, what are the lessons for you and me? First of all, you have to manage your business carefully, and I'll tell you why. Small business bankruptcy is personal, and let me tell you why. Those of you that run a small business know what this is, PG. Hey, I'll give you a loan for those 3 trucks, Wells Fargo says, but you're going to have to sign a PG, a personal guarantee. It's against your house. It's against any assets you have. So small businesses usually get tied to the personal side. You're not big enough as a corporation to be given, corporate type loans or bonds, and so they tie it to you. As a small business person, it's tied to the owner, and the banks are not dumb. By tying it to you, it also ties it to you in the case of bankruptcy. And most people want to avoid bankruptcy at all costs because you have 7 to 10 years going to be on your credit and you can't get loans after that. Then, why do corporations have leverage? I understand there's credit counseling, Biz Doc, but why do corporations have such leverage? They influence the law through lobbyists and donations to political candidates. That's how they do it. And that's how the laws work better for them than they do for people. And remember the golden rule of debt negotiation. If you owe the bank $1 million, you're in trouble. If you owe the bank $1 billion, they are in trouble. So they are more likely to say, hang on, how are we going to renegotiate this? How are we going to put it together? How are we going to get it? So remember, when you hear bankruptcy and you see articles or tweets, or what do they call them on X now? X's? You posts on X rather than tweets. You see things, WeWork in the tank in bankruptcy. Nope, bondholders are in the tank. Landlords are in the tank. Debtors are in the tank. Service providers are in the tank. WeWork has a restructuring plan to protect the core business and to protect 2,700 jobs, and the judge is more than likely to come together and agree to that plan, and when he signs the document, at that moment, whoosh, tons of things get wiped out. And now there's companies that have gone through multiple bankruptcies. Guitar Center has been in and out of bankruptcy for the past 10 years, it seems. So a lot of times, just to stay in business, rumbling, strumbling, they'd rather it not go to zero. They'd rather there be some way for it to stay in business, specifically $3 billion of debt holders that converted to equity that want to see WeWork come out of bankruptcy with some sort of path, be traded on the stock market so that equity has a prayer over time of being worth $3 billion. Get it? That's why it's called restructuring and exiting bankruptcy. And that, in some ways, is a good thing for the economy because it saves jobs, but there are sides of the economies that get really screwed when those bankruptcies come down and the judge strokes their pen, and there you go. A lot of debt disappears. And that, my friends, is the story of WeWork so far. We'll see what happens coming out of bankruptcy. Pay attention to common news stories that you'll be able to find on it so that you could kind of stay up to speed. And I hope those lessons were helpful for you as you run your business, understanding what's up with them. Now, I'm going to take my vault. I hope I unlocked your brain, and I'm going to go back to the studio.